Okay, gather around the banana tree because something big just happened and the monkeys, your monkeys, have the full breakdown. The government just made a confirmed, locked-in, no takebacks change to Social Security that takes effect March 1st. And while most humans were distracted throwing things at each other on the internet, this little update quietly walked in the back door and sat down at your kitchen table. We're talking about your check. Your monthly banana delivery, the one you spent 40 years swinging through the jungle to earn, and today, we're breaking down every single detail in monkey terms, because honestly, monkey terms are cleaner. Stay, we're just getting started. Let's start at the beginning because some of our younger monkeys in the back are confused. Social Security is not a gift from the big monkeys in Washington. It is not charity. It is not someone doing you a favor. It is your bananas, stored in a vault, for later. Every single paycheck of your working life, the government reached into your bunch and said, "We'll hold these. You'll want them when you're older and your arms are tired." That's it. That's the whole deal. You worked, you contributed, and now you're supposed to collect. Simple monkey economics. So when something changes about how those bananas get delivered, how many you get, or who's been secretly eating a few on the way over, you deserve to know about it immediately, not buried in a 47-page PDF, not in bureaucratic language that even the bureaucrats don't understand. From us, right now, in plain monkey. All right, first big update. The cost of living adjustment, or COLA, for 2026 is 2.5%. Now picture a monkey who just heard that number. That monkey looks unimpressed. That monkey has seen gas prices. That monkey has been to the grocery store. That monkey knows what a bunch of bananas cost right now compared to 3 years ago. 2.5% feels like someone threw you one banana and called it a raise. But, and here's the part people keep sleeping on, that adjustment is now officially baked into your March 2026 payment. So if you haven't looked at your actual benefit amount recently, you're flying blind. For the average recipient, 2.5% means roughly $50 more per month. Over a full year, that's $600. If you and your partner both collect, that's potentially $200 extra annually. Is $200 going to change your life? Maybe not. But it's your $200, and you should know you have it. Go check your statement. Not later. Now, we'll wait. Okay, we won't wait. We have more to cover, but go check it tonight. Okay, put the bananas down. This is the segment that could genuinely mean thousands of dollars back in your pocket, and we need your full monkey attention. For decades, there were two rules quietly chewing through the Social Security checks of millions of public workers: teachers, firefighters, police officers, postal workers, government employees. These rules were called the Windfall Elimination Provision and the Government Pension Offset, WEP and GPO, or as we call them, the banana thieves. The original logic was, hey, you get a pension and Social Security? That's too many bananas, buddy. And so the government just reduced their benefits, sometimes by hundreds of dollars a month. For workers who had also paid into Social Security through second jobs, part-time work, or a working spouse, it was, to use the technical term, bananas, and not in a good way. Well, the Social Security Fairness Act was signed into law. WEP and GPO are eliminated, gone, bye. And here's where March 1st, 2026 matters enormously. The SSA has been processing retroactive payments and adjusting monthly benefits for approximately 3.2 million affected Americans. And March is a significant milestone in that ongoing timeline. If you or your spouse worked a public sector job and your Social Security was reduced because of WEP or GPO, call the number. Yes, hold times are long. Yes, it's annoying. But some people are owed thousands of dollars in back payments. That's not their money. That's your bananas. Go get them. Now here's where we have to talk about Medicare, specifically about Medicare Part B, Because Medicare is essentially a monkey who sits between the government and your bank account and takes their cut before you see a single dollar. In 2026, the standard Medicare Part B premium is $185 per month. So while COLA is giving you bananas with one hand, Medicare is quietly taking some back with the other. Net result? Your actual increase might feel smaller than advertised. This is not a conspiracy. It's just how the math works, and you need to do the math. But here's something even fewer monkeys know about. There is a thing called IRMA, the Income-Related Monthly Adjustment Amount. And if your income is above $106,000 a year individually, you're paying more than the standard premium. Significantly more. Some people are paying $600 a month or higher, straight out of their Social Security check. And here's the kicker. If your income dropped recently, you retired, you had a major financial change, you can appeal your IRMA determination using Form SSA 44. Most people never do this. Most monkeys just look at the number, make a sad face, and eat their smaller banana in silence. Don't be that monkey. File the appeal. This one is for the monkeys who are collecting benefits but also still working. You multitaskers, you unstoppable hustlers, we see you. Here's the deal. If you're under full retirement age and you're still earning income, Social Security has a cap. If you earn too much, they start reducing your benefits. For 2026, that earnings limit sits at $22,320 per year. Under that, you're fine. Over it, they start trimming the bunch. Now, and this is important, if benefits get withheld because of the earnings limit, they're not gone forever. When you hit full retirement age, the SSA recalculates and credits you back for withheld amounts. So it's not a total banana heist, but it does affect your cash flow right now. And if you're in the actual year you reach full retirement age, the limit jumps significantly, much more breathing room. The move here is simple. Know your numbers. Sit down, do the math, figure out where you land relative to the limit. Don't get surprised by a reduction that a 15-minute calculation could have predicted. Surprised monkey is a sad monkey. We saved this one for here because this is where everyone's face does the thing, the frustrated thing, the "you have got to be kidding me" thing. Your Social Security benefits can be taxed by the federal government. We know. You already paid taxes when you earned the money, and now, when you collect it, they might tax it again. It feels like a monkey taking a banana, giving it back to you, and then asking for a bite. But here we are. The thresholds work like this. If your combined income, that's your adjusted gross income, plus non-taxable interest, plus half your Social Security benefits, exceeds $25,000 as an individual or $32,000 as a couple, up to 50% of your benefits can be taxable. Go above $34,000 individually or $44,000 as a couple. Now we're talking up to 85% of benefits subject to federal tax. This didn't change dramatically with the March 2026 update, but it absolutely affects how you should be thinking about your total retirement income picture right now. Tax planning isn't just for rich monkeys. It's for every monkey who wants to keep more of what they earned. All right, action time. No more sitting in the tree. Here is exactly what smart monkeys do this week. Step 1. Go to SSA.gov and create or log into your My Social Security account. Look at your earnings history. Make sure every year of your working life is accurately recorded. Your benefit is based on your top 35 earning years. If years are missing or wrong, you could be getting less than you're owed. This takes 20 minutes. Just do it. Step 2. If you or your spouse worked in a public sector job and were affected by WEP or GPO, yes, the hold time might make you want to throw your phone into a tree. Call anyway. There may be retroactive money with your name on it, and March 2026 is a key date in that payment timeline. Step 3. Review your Medicare situation. Know your premium. If your income dropped significantly and you're paying elevated IRMA premiums, download Form SSA 44 from SSA.gov and file that appeal. This is a real thing. It works. Most monkeys just don't know to do it. Step 4. If you're still working while collecting, run the numbers on the 2026 earnings limit. Know exactly where you stand. No surprises. The monkeys who end up with the most bananas are never the ones who had the biggest trees. They're the ones who paid attention, who asked questions, who didn't just accept whatever landed in their account and assume the government counted correctly. You worked your whole life for these bananas. March 1st, 2026 is the date when these changes officially take effect. The difference between knowing this and not knowing this could be hundreds, maybe thousands of dollars over the coming years. Don't leave your bananas on the table. That's the full breakdown. COLA increases, WEP and GPO elimination, Medicare premiums, ERMAA appeals, earnings limits, benefit taxation, all of it, in monkey terms. The way it should have been explained from the start. Go check your statement, make the call, file the form, show up for yourself financially the way you showed up for your job for 40 years. You earned this, every single banana.